Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli.
And I'm Danny Akuye.
And Danny, a little bit of a lackluster day on the market. Of course, we had the CPI print coming in a little hotter than expected. Of course, markets now pricing in or starting to try to price in when we are going to see these cuts. I asked David Scott today, obviously March off the radar. Could it be May still? He says, look, could be June or later. Everyone's sort of scrambling to reprice again.
Yeah, absolutely. I don't think there's any decisions yet, but no doubt we'll get a few heads up next week when the FOMC meets.
Indeed. Let's just have a look at where the CBO 200 is tracking. As we said, fairly lackluster, not really moving that much, up about 0.25%. And the ASX 200, I think, only had a few
12
points.
12 points or just over 0.15%. So really, Jules, when we have a look at our three themes, it was a bit lukewarm, wasn't it today in Australia?
It's not like we were hot or cold in response to that CPI print. We just took it lukewarm. Yesterday we were talking about marking time, treading water. It's all the same kind of thematic that we seem to be holding around these records, but not really making some big inroads at the moment.
No, but it is interesting because there is a lot, as per usual. We don't have our friend Martin Crab with us with his duck, but there is a lot going on in terms of under the surface, in terms of some sectors, some stocks doing really, really well. And the retailers today, discretionary retailers doing really well. Aristocrat was up, had a price upgrade, and I think we were also seeing Premier Investments trading higher as well. So it's very, very sector specific at the moment.
Yeah, absolutely. So that robust retail sector really boosting the overall market. And then talking about under the hood, under the pump as well. I mean, these iron ore futures that had a bit of or quite a big decline, I should say, coming through on Monday on that weak demand. Then it looked like we were starting to see a little bit of a rally coming back through into that. A lot of momentum about whether this sell-off in China is overdone as well. But now we're seeing iron ore very much under pressure with China steel mills cutting output and prices, and CBA saying, look, it could fall below $100 a tonne.
Absolutely. So those Singapore futures, I think, or actually it was the Dalian futures falling about 7% today. So let's check in maybe with some of the sectors and have a look at the price movements, because market, I don't think, was particularly phased by those falling iron ore prices. So let's have a look at the big miners. And well, I suppose you can see there Fortescue and BHP selling off, but Rio Tinto bucking the trend up by about 1.2%. So, you know, a bit of a mixed bag there.
Yep, having a look at some of the REITs. Goodman Group had a pretty good day, up by 2%. Charter Hall Centre also having a solid session, and that was a sector that was generally higher today. And
let's have a look at consumer discretionary, which we touched on briefly. And look at that, lots of green on screen, but across Wesfarmers, Aristocrat, JB Hi-Fi, Premier Investments and Super Retail, all up between over 1% to up over 2%. So cracking day there.
Yeah, absolutely. The worst performing sector was materials, and we'll get to why in a moment. Well, we touched on iron ore, but one stock that did well was Liontown. It's announced this $550 million debt funding facilities, and Wilson's has upgraded it to overweight with a $1.85 price target.
But heading the other way is Core Lithium as bosses exit with losses and impairments rising. Gareth Manderson and a second independent director have quit, and Jarden has a sell on Core Lithium, and that stock off by 11%.
11%, ouch. Treasury Wine Estates came out of the gates really well, but only closing up by 1.3%, but it is optimistic about the removal of these Chinese tariffs, and so are many analysts as well. I think Jefferies had an update on that stock as well, an upgrade, I should say.
Absolutely. And Appen shares, which were off, up about 30% yesterday on rumours of a possible takeover, said it had been approached by a US tech rival about a potential takeover, and the stock surged, as I said, 30% yesterday before being put into a trading halt. But today, now that they've said it might possibly be a script offer, the market goes, oh poo-poo, I don't like that, and sent the stock down by 9.3%. So highly volatile.
All right, welcome to the COB, Mark Gardner from MPC Markets. Danny, I think you should introduce, because you found his amazing tweet today.
Yeah, so we had to share a tweet from Mark because, there we
go.
Sadly, we have lost the lion, as in a Liontown, ho-ho, riding the bull. So let's get Mark in. Hi, Mark. I had to focus on that tweet. It was just, you are getting, your gifts are getting even more spectacular by the day.
Yeah, no. Who said I wasn't? Into the AI thematic. It's the AI imaging tools are very good these days. So that really helps us save a bit of money in terms of a graphic designer. But I've been saving that one since we bought Liontown under $1 about 3 weeks ago or 4 weeks ago. So. I figured today was not a bad time to release it. Although we have peaked off that, we've come off that high there at 155 early this morning. Obviously it's a really good announcement for them. $550 million debt facility. It really gives them a lot of negotiating power, I believe. Obviously, Gina was happy to buy a blocking stake in the high twos. Albemarle, we're looking at over $3. So. That thing pulling back all the way down to, I think, 85 cents was the low, was a massive overreaction. Now we've seen the lithium price, look, it started to look like it's bottoming. I'm not going to definitely call it bottom because commodities can be pretty tricky and they usually try to test your resolve. But I mean, this is a high quality asset. It's a 20-year mine life, tier 1 jurisdiction. And they're very close to production. So and look, if Hancock Mining liked it at $2.80, surely they're going to like them at even at $1.50.
Yeah. Well, maybe you can take some of your AI skills over to the Palace as well, Mark. Let's talk, though, about Core Lithium, because it was heading the other way, as we mentioned, on a bit of a management shake-up. What did you read into those developments?
Look, Core was always a really high-cost producer anyway. Obviously resigning, I guess, it'd be debatable if you probably went into the details of it all. It's not particularly well run. I mean, opening an operation based on, effectively surge pricing, which was never going to last, was this was kind of a stock that realistically was going to be was going to be more of a thematic trade than a long-term trade. I think it's not even in the same postcode or the same class as the likes of Liontown or PLS or Mineral Resources that are high class operators for PLS and MinRes, but it wasn't necessarily a high class reserve and it was very expensive. So it was always one of those ones where you sort of identified as would be the most vulnerable. And look, it's I think questions have to be asked about if you're investing in an operation that realistically was, lithium was never going to stay at those elevated prices, particularly with the surplus coming along. And to be honest, I haven't really looked at it for at least 18 months because it was just off our filters.
Okay, Mark, let's switch tacks and talk probably
wine.
Something that's close to all of our hearts, although I don't tend to drink red wine because I get hay fever. Treasury Wines, the removal of tariffs. Was this sort of in the share price a little bit, or just the market just hasn't really absorbed the full, I suppose, growth prospects as a result of the removal of these China tariffs?
Yeah, I think a bit of both, to be honest. It was definitely priced into the market. And we saw, obviously, we were 3 months, about two or 3 months ago, it was really priced in. We're a holder of Treasury Wines for our portfolios. We think that acquisition they've made in California is going to be, I think global wine drinking is trending a little bit downwards or going flat. But that premium bottle range where they've really priced themselves is where they're really forging, a real niche with, I think that Californian acquisition brought down the Penfolds range to only about 38%, from about over 50% of their revenues. So, look, Treasury Wines has been a hell of a lot higher prior to that tariff coming in, and I do sincerely believe that this is a much better company than what it was back in those days. It was just literally sell grains to rich people in China. That was the business model. Now they've got wineries in France, They've got a great operation that they're obviously integrating in California. They've obviously still got that Grange and that market to go to in China now as well. But it's a much more well-rounded business. They've found workarounds for tariffs as well, where they can add some of the local wine and basically avoid tariffs altogether. So I think Treasury Wine shows really great prospects. It could be a bit of a bumpy ride. That was a pretty massive acquisition. I think it was $1.7, $1.8 billion. So look, it's not something that, we sort of bought around the mid-10s. We've actually trimmed some. Our target price is $12.50, which it hit today, and we'll sort of see how the next earnings season goes. But I would fully expect this to continue to rally higher.
All right, cheers. Mark Gardner, thanks as always, and thank you for providing us with that very exciting animation as well. Mark Gardner from MPC Markets.
Yes, and of course the stock of the day was a Treasury Wine Estates, and Andrew Violin from a DP Wealth Advisory and Henry Jennings from Marcus Today joined us.
I'd wait till the kind of the froth. That's go into beer rather than wine. But if you just wait till the froth sort of peels away a little bit from this announcement, and maybe wait a week or so, and then maybe look at buying it. But I think $14 was my kind of price target. It's $12.50.
Yeah.
There's still
certainly a hold if you're in it.
It's certainly a hold.
Yeah.
There's no reason to sell it. But I think they've got an investor day coming up in the Napa Valley, which I'd like to put my hand up now. If Treasury Wine Estates, you're out there. If you're interested,
give them a call.
I'm interested. I'm more than happy to pop over there, do my bit again. So yeah, it's definitely a hold.
Okay, Andrew.
Treasury Wine is definitely a hold for
Right.
all the reasons that Henry's just covered off on, and technically it's looking okay because it's bounced back, but to the point before, those easy gains have already been made. So wait for a few days, wait for that sort of excitement to come off the boil. I mean, we've been up 16 of the last 17 weeks for the market. On any market pullback, that's probably the opportunity.
Yeah.
But at these levels, it's certainly not looking compelling. So
Okay.
it is a
All
hold.
right.
And on that point, I mean, Simon from Startup Daily just burst into the studio to tell us, because we were not aware, I do know when International Champagne Day is, but today, March 13th, International Riesling Day, a toast to the timeless allure of Riesling.
I do love a good Riesling, but when is International Champagne Day?
Oh, look, I said I know it, and now I'm going to have to Google it. But I feel like it's in November.
Okay, well, while you're looking that up, the other
October
thing
25.
that October 25, there we go. We need to mark that in the diary. Hint, hint. Now, Koshi just wanted me to highlight that we had a double strong buy on Woolworths today, a 1 in a 10-year opportunity, according to our guests Andrew and Henry. So whilst not stock of the day, they're clearly upbeat about Woolworths. Now let's have a look at some of the market leaders. There we go. Liontown, top of the pops, Nine Entertainment and Magellan. Some of the laggards doing some running today. Webjet back in focus, and Sayona Mining.
And having a look at the losers today, we mentioned Core Lithium at length. Chalice Mining also under pressure, but had a good day yesterday. Capricorn Metals, West African Resources, and Data 3 all coming under pressure.
Now let's have a look at the small caps and see what's happening there. Farm Ost up 15%, Paradigm Biology up 11.25%, and Ardia Resources up 9% today.
And in the loser end of the small caps, Brockman Mining, Core Lithium, of course, Appen we touched on as well after coming out of that halt. Greenex Metals and Catalyst Metals all came under pressure today.
Now, after that huge night last night with the US CPI, let's check in with what's happening tonight. And we have a UK industrial production for January, as well as the UK trade balance, Eurozone industrial production for January, and turning to the US, NBA mortgage application data and DLTR earnings.
Yeah, Dollar Tree coming through tomorrow. Bellevue Gold, Chalice Mining, Gallon Lithium, Renasco Resources, so quite a few of the smaller ones coming through with their earnings. XDiv, quite a few as well. Breville Group's in there, Ingham's Group, Regis Healthcare, Southern Cross Media, TPG Telecom, and we also get, that's quite important, the overseas arrivals figure from the ABS, just telling us how much we're seeing in terms of a tourist revival, and also New Zealand showing their visitor arrivals too. And interestingly, in the last print of our arrivals, and I assume it's probably quid pro quo for New Zealand. New Zealand were actually our strongest visitors, so you know we're still not seeing.
Can't stay away, can they?
They can't. It's so close, but we're still not seeing the big resurgence of Chinese tourists. And Oxford Economics says that may not happen until 2026.
Oh wow! By then they'll probably going to that new airport out at Badgerys Creek in Penrith, because that's what it's designed. Well, it's designed actually to capture a lot of that Asian market. Something important: those small lithium producers do report at this time of the year. That's interesting. They're out of cycle. They report after the February reporting season, so that's what we're seeing at the moment. But let's get a final recap on today's market. COB 200 up by almost 4 points, or almost 0.3%, Jules. And what about the ASX?
The ASX 200 gained 17 points on the close. Had a little bit of a smaller pop than on the close, up 0.2%, 7,729. Of course, Liontown, as we mentioned, the standout of the day-to-day material stock. So in general, came under pressure. And of course, just a reminder, you've got a few hours, less than 8 hours, if you still want to fill in our survey, of course, and there are prizes to be won. So we'd love it if you can fill it out, and we can make ausbiz better for you.
Absolutely, and there's a fantastic prize. MPC Markets are offering a $5,000 portfolio, and you've got to be in it to win it, because there are other prizes too. So just go to ausbiz.co/survey24.
All right, that is it for Wednesday. We'll be back at 9:40 Eastern tomorrow with all the follow-up from the overseas markets.
Overseas markets.
Can't talk now.
Absolutely. Have a great evening, everyone.